Hello and welcome to All Smiles Performance Report for the term. My name is Marcus and I'm a member of the fire-breathing rubber duckies, and I'll be taking you through the report today. I'm a member of the marketing team and the management team for our new project in Latin America. So we'll get started with why we're expanding into Latin America. Several years ago, we decided to expand into Latin America mainly due to the fact that sales have been plateauing and stagnating in current markets. So Latin America was chosen as a test bed for our products. It's the closest market to our current factories, and there's low barriers of entry to this market. 7 countries within Latin America were identified as potential prospects for our new toothpaste brands. These countries were Argentina, Brazil, Chile, Colombia, Mexico, Peru, and Venezuela. At the time of this report, we have entered all of these markets and are maintaining favorable margins as well as market share in each of them. Of course, no market is free of competitors, and in this region we have faced stiff competition from B&B Healthcare, CareMore, Driscoll, Evers, and of course, regional and local competitors. As managers of this company, our job was to enter the Latin American market as smoothly as possible. Our general strategy was to enter one market and expand as quickly as possible. The second aspect of our strategy was to move as much production as possible to the Latin American market. This would reduce trade tariffs and it would make it much more profitable to sell in Latin America. First step in choosing which market to enter first was to look at the general demographics of the market. So basically looking at the demographic factors, it was decided that Brazil was a very favorable market to enter. Brazil was an attractive choice due to the size of the potential market, high economic growth, as well as purchasing power among consumers. Additionally, Brazil has favorable trade ties to different countries in the region, meaning that if we were to establish our production in Brazil, it would be very easy to expand to all the neighboring regions. For this reason, we decided to enter Brazil first and establish production as soon as possible. The order of entry into the Latin American countries was as follows. First, we went into Brazil and established production. Second, a presence was established in Mexico, using primarily production from the initial home plant. This was an easy market to enter since the relations between Mexico and the nation where our home plant is located are quite favorable. There are good trade regulations and low tariffs on products entering Mexico. Low tariffs meant that our company could easily ship product from the home location at a cost that would allow us to be competitive and profitable. During this year, product was shipped to Mexico from our home location while the production at the Brazil plant grew. Next, Argentina was selected as the third market to enter. Argentina is a very large market and product could be cheaply shipped from the Brazil plant to the Argentinian markets. Maintaining a good competitive presence in these large initial markets was of high importance to our group. Making profits in these 3 large markets would make it easier to cater to the smaller, less profitable markets in the region. Colombia was the next largest market, so the company entered this region next. Once again, product from the Brazilian plant was shipped at a low cost to the Colombian market. This allowed us to be competitive and eventually become profitable. Our plan after this point was to enter the smaller markets in no particular order, these markets being Peru, Chile, and Venezuela, mainly due to the fact that they're less profitable and they're very similar in nature. Markets were less desirable due to lower populations and lower purchasing power among consumers. We viewed these as lower priority targets, but our initial goal was to have a presence in each of these markets, so we pushed forward. Venezuela was not expanded to by the time of this report, however. Plans to enter this market have been made and expansion can be made at a future time. Now we're going to talk a little bit about the plant location and capacity. Our manufacturing location was a core element of our strategy. The company needed as much local production as possible to be profitable. The plant was built and is currently located in Brazil, and at the time of this report, it is capable of producing 235 million units per year. The plant manufactured nearly all of the company's 264.3 million units in Latin American sales. Having a large manufacturing operation in Latin America was key to having profits in the region. Shipping from the home plant to regions besides Mexico would be prohibitively expensive. So, as much production as possible had to be relocated to Latin America. Each year, the production at the plant was increased by at least 25 million units. Some years, production was increased by as much as 100 million units. We're now entering the part of the report where we're going to talk a bit about the marketing strategy. As new entrants, our management team was well aware of the fact that the company had a low brand image and low brand awareness. It was apparent from the start that we would have to use a low-cost leadership strategy in order to achieve the sales volume that we required. In each region that we expanded to, we adhered to a similar working plan. Expansion started by keeping prices low and maintaining an advertising presence in the region. Majority demographic groups were catered to first, in order to get sales rolling and have the company's market share increase. Once a large enough presence was established in each market, we steadily raised prices to extract a profit. Additionally, we started to offer more niche products to niche markets once we had already made an established profit in the region. In terms of distribution channels, the company's products were provided mostly in the traditional, self-serve, and hypermarket channels due to demand for these types of distribution. Web and wholesale distribution were not explored as options in any of the markets that we entered, but this could be a region that could be improved in the future. Advertising was not as successful as our team predicted. Unfortunately, we couldn't find a winning formula for any advertisement in any region. Our return on investment in terms of marketing wasn't too terrible, but it was among the lower end of companies in the region. Despite the fact that we had a variety of advertisements in a variety of different regions, containing different languages, catering to different demographics, it's surprising that we didn't get a good winning formula. Our advertisements were intelligently designed to target majority groups and were voiced in the local languages. Despite this fact, success was simply not found in advertising for us. This remains one of the company's weak points and could be a source of improvement in the future. Now we're going to talk a little bit about our endeavors in the Latin American market. While there's room for improvement, it must be said that Allsmell performed very well in its first offering in a new market. In its final year alone, the company moved 264.3 million units of toothpaste. That's a 14.4% of all shares in the region. Allsmell also sold $251.5 million in sales. And we have developed a brand equity index of 61. While some of these figures are not that impressive, they were improving strongly year upon year. In addition to this, profitability was growing quite steadily. The impressive part about this is the company has maintained a strong presence in each region of the Latin American market, with the exception of Venezuela. Growth and profitability have been steadily rising, especially in recent years. It has become clear that all the difficult groundwork that was laid in the initial years has paid off, and the company is growing into a leader in the market. Given a few more years, Allsmell may be one of the strongest, most recognized brands in the region. Our management team has learned a lot from this endeavor. Managing this brand has been a challenge, but our team has learned much for the years ahead. One of the things that we learned was to expand quickly, enter new markets each year. The potential to sell more units greatly outweighs the costs of investing in that market. We also learned to increase local production as quickly as possible. If the company doesn't have enough production capacity, we will not be able to sell units at a low enough cost to be profitable. Additionally, we learned to raise prices and lower allowance to tweak profit margins. Initially, the company did not make a lot of money. In fact, it lost money. But over time, around the third or fourth year, we started to tweak our prices and lower allowance to extract profits. And over time, we saw fairly large profits starting to amount. One of the harder lessons that we learned was to make a lot of advertising campaigns, see which ones stick in certain regions, and to run with them. Another point that we learned was to utilize customer information wisely when deciding which product SKUs to introduce initially. Satisfy the largest markets before looking into niche offerings. If you can't extract a profit on the majority offering, then you're most likely not going to extract profits trying to cater to niche markets. One of the more important points that we learned that came up later on in the later years of our operation was to continually expand product lineup. The more products that you offer, the more people and more segments that you can target. This generally means more sales overall. Utilizing your production capacity and extracting even small profits from each segment is of huge benefit when you're talking about operating in multiple different countries in a region. Finally, we learned not to imitate competitors' moves. It's much more profitable to attempt to think ahead and to stick to your own plan. To summarize this report, the Allsmell brand is growing strongly in its new market. and it's turning an increased profit with each passing year. This team has learned many lessons with the company's expansion into new territory, and we're set to make even larger expansions in the future. And with that, we have reached the end of this report. Thank you for listening, and hopefully you're satisfied with our performance.